Welcome to TalkTickers, the deep dive into the earnings calls that matter to you.
And today, we're getting into Hexcel Corporation. First quarter 2025 results?
Exactly. We'll cut through the noise, pull out the key takeaways on performance, challenges, the outlook, everything experienced investors need.
Okay, so let's start with the top line. For Q1 2025, Hexcel reported sales of $457 million.
$457 million. Got it. And earnings.
Adjusted diluted EPS that came in at 0.37 cents.
All right. And the main segments. I gather it was a bit of a mixed picture.
That's right. Commercial aerospace sales, they actually dipped year over year. But defense, space, and other, that part showed some growth.
And the big news, I suppose, was the guidance change.
Yeah, they revised their full year 2025 guidance downwards. Primarily, it seems, because Airbus changed their demand forecast for A350 materials pretty significantly.
Okay, let's definitely dig into that guidance revision. But first, that commercial aerospace dip. Sales were, what, $280.1 million, down about 6.3%.
Correct, 6.3% decrease year over year on a constant currency basis.
What drove that?
Well, the main culprits were lower sales tied to the Boeing 787 and the 737 MAX.
So the ongoing Boeing production rate issues and maybe some inventory burn-off?
Exactly. That seems to be the story there. Supply chain stuff continues to bite.
Well, wasn't there an offset? I thought I saw something about international demand.
There was, yeah. A bright spot. Other commercial aerospace, which is driven more by international demand, actually increased 7.1%, so that helped cushion the blow a bit.
Interesting.
And sequentially, quarter over quarter, commercial aerospace overall was actually up slightly, nominally, but still.
Driven by?
Airbus programs mostly. The A350, A320, T20, they all saw sequential increases. And other commercial, too. The 737 MAX was flat sequentially, though.
So signs of life there, but the year-over-year Boeing comparison is tough.
Precisely. Now, flipping over to defense, space, and other, that is stronger. $176.4 million in sales.
And that was up, you said?
Yep, up 2.7% in constant currency compared to Q1 last year.
Okay, what's working well in that part of the business?
It's pretty broad-based, actually. They highlighted helicopter programs like the CH-53K and the Black Hawk. Also classified programs, several space initiatives, and an international fighter program.
So that really shows the breadth of their defense portfolio, touching both U.S. and European programs.
Absolutely. And it leverages their vertical integration in composites, which is key for these demanding applications.
Let's talk margins, though. Gross margin was 22.4%, down from 25% last year. Why the squeeze?
Two main things hit them there. First, just lower operating leverage because commercial aerospace sales were down year over year, less volume going through the plants.
Makes sense. And the second?
They had a power outage back in January at their facility in Decatur, Alabama. That disrupted production, obviously, and added some restart costs.
Right. Those one-off operational hits can definitely impact a quarter.
For sure.
Now, they were also busy financially, weren't they? Share buybacks and refinancing.
They were. Repurchased $50 million of their stock in Q1.
Which usually signals management feels the stock is a decent value.
Typically, yes. And it returns capital to shareholders. They also refinanced a $300 million fixed-rate note that was coming due.
Hopefully locking in good rates or just managing the maturity schedule.
Likely a bit of both. Helps with financial stability long term.
Okay, let's circle back to that revised full-year guidance. That seems crucial. Sales and adjusted EPS now expected lower. What happened?
The number one reason, the absolute main driver, was Airbus significantly lowering its A350 production forecast, or at least the materials Hexcel supplies for it.
How big a change are we talking?
Well, Hexcel had planned their year around supplying about 84 ship sets worth of materials for the A350.
Okay.
The revised forecast from Airbus puts that number down around 68.
Wow. And those ship sets are valuable, right?
Very. They mentioned a value around $4.5 to $5 million per ship set. So, losing roughly 16 of those, you can do the math. It accounts for a huge chunk of the revenue guidance reduction.
Yeah, that's a massive hit from just one program adjustment.
It really is. They also mentioned a slight reduction in the A320 build rate expectation contributing, plus, the ongoing softness in the 787 and some weakness in automotive markets.
So even with defense doing reasonably well, a big shift from a major customer like Airbus just overwhelms that.
It really underscores the concentration risk you see in aerospace. Even for a diversified supplier like Hexcel, when an OEM like Airbus makes a big change, it ripples through significantly.
So how is Hexcel reacting operationally? What are they doing to manage through this?
They're focusing on, well, the fundamentals, the things they can control. Big emphasis on cost management.
Like what specifically?
Headcount, for one. They said they're currently running about 5% below their hiring plan and expect to stay there.
Okay.
They're also pushing for better material usage efficiency, cutting back on discretionary spending, taking another look at planned capital expenditure.
Pulling back on CapEx.
Yeah, reducing it by about $10 million for the year just through prioritization. And they're really focusing on their S&OP process, sales, inventory, operations planning, trying to right-size working capital for the lower demand.
Standard playbook for managing a downturn, but necessary.
Absolutely. Disciplined execution is key right now.
Okay, another hot topic always, tariffs. Did they talk about the impact of the new U.S. tariffs announced in April?
They did address it. They said those tariffs weren't included in the Q1 results or the revised 2025 guidance because, well, the situation was still pretty fluid and uncertain when they reported.
Understandable. Do they have an estimate of the potential hit?
Their initial estimate for the direct impact is somewhere in the $3 million to $4 million range per quarter.
Okay.
Manageable, perhaps.
Potentially. They also pointed out that over 85% of their spending in 2024 was actually in the U.S. and 5 European countries where they have major operations.
So not a huge direct exposure to, say, China.
Very little. They said only a bit over 1% of their spend came from China, Canada, and Mexico combined. So the direct tariff impact might be containable, maybe offset with productivity.
That seems to be their view. However, the big question mark, and they acknowledge this, is the indirect impact. How might tariffs affect the broader aerospace supply chain? Could it slow down OEM production rates eventually? That's much harder to predict.
Right. And what about passing costs through?
Good point. They mentioned that for many of their European contracts, the terms state that tariffs are actually the buyer's responsibility. And for some big commodities, they might be able to pass through costs, including tariffs.
So some contractual protections, but still a lot of uncertainty on the indirect effects. Something to watch.
Definitely one to keep an eye on.
Looking further out then, beyond these near-term headwinds, what's the longer-term story Hexcel is telling?
They're still expressing optimism about future cash flow. The core belief is that commercial OEM production rates will eventually ramp up as the supply chain heals.
And they're not just waiting for commercial recovery, presumably.
No, they're actively targeting growth in defense and space, which we saw is already performing well, plus other areas like regional jets and the emerging EVTOL market, electric vertical takeoff and landing aircraft.
Right, the air taxi buzz.
Exactly. And longer term, they see big opportunities with next-generation narrow-body planes and new propulsion systems, which are expected to use even more lightweight composites.
And they stress their market position.
Very much so. They highlighted being the only U.S.-owned major producer of the kind of carbon fiber composites used in all these big commercial and military programs. A strategic asset, really.
Do they have financial targets tied to that long-term view?
They do. They talked about potentially generating, get this, $1 billion in cash flow between 2025 and 2028.
$1 billion. Driven mainly by?
Primarily driven by the eventual ramp-up of the A350 program, ironically, despite the current cutback. They believe they have enough existing capacity for the anticipated peak rates, and they've got a new fiber line coming online in a few years to add even more capacity down the road.
So navigating turbulence now, but positioning for a strong recovery. And shareholder returns remain a focus.
Seems so. We mentioned the $15 million buyback in Q1. They still have authorization for another $185 million. Plus, the debt refinancing looks solid, and they declared their regular quarterly dividend of $0.17 per share.
Okay, so let's try to boil this down for our listeners. If you're looking at Hexcel right now, what are the key takeaways from this quarter?
Well, first, the results clearly show the commercial aerospace recovery is still bumpy, very uneven. The big hit from the Airbus A350 guidance revision really underscores the supply chain dependencies.
But defense and space are providing some stability.
Yes, that's the second point. Continued strength there is a crucial diversifier and growth engine for them right now.
Third,
their proactive cost management and focus on efficiency. That's going to be absolutely critical for protecting margins while commercial demand is softer.
And the tariff situation.
That's number 4. Direct impact looks maybe manageable, but the uncertainty around indirect effects on the whole industry is a risk factor you have to monitor.
And finally, the long view.
Yeah, despite the near-term issues, their long-term optimism remains. Based on expected production rate recoveries, growth in defense, space, and new markets, plus their unique market position as a U.S. supplier. It paints a potentially attractive picture for investors with a longer time horizon.
Okay, great summary. Now let's pivot to our favorite speculative segment. This is not financial advice. Time to put on our thinking caps and come up with a, let's say, wild yet plausible trade idea inspired by this Hexcel deep dive.
All right, let's brainstorm. Always remember, of course, purely hypothetical, illustrative, not advice.
Disclaimer noted. What have you got?
Okay, how about this pairing? You go long Hexcel itself, and you pair that with a short position in a European-based, maybe luxury or high-performance, automotive supplier that's heavily reliant on exporting into the U.S. market.
Ooh, okay. Unpack the rationale there. Long Hexcel, short Euro auto supplier.
Right. The long Hexcel part is based on their long-term aerospace recovery potential, especially that A350 ramp eventually, plus the solid underpinning from U.S. defense work. It's a bet on eventual normalization and their strong position.
And the short side? Why the European auto supplier?
Because that supplier faces a couple of risks highlighted, indirectly maybe, by the Hexcel call. First, potential economic slowdown impacting luxury goods. Second, and more directly related to the tariff discussion, the risk of escalating trade tensions or new tariffs specifically targeting European goods, maybe even cars or auto parts, coming into the U.S.
Ah, so you're playing the divergence. Hexcel weathers near-term aerospace issues with a strong defense base and long-term recovery potential, while the Euro supplier has more immediate tariff and potentially macroeconomic risk focused on U.S. imports.
Exactly. It capitalizes on that divergence in near-term risk, particularly around tariffs, while still acknowledging Hexcel's current headwinds, but betting on the longer aerospace cycle.
Wild.
Yeah.
Yes. Plausible. Maybe. Definitely fits the wild yet plausible bill. A very interesting construction. Again, folks, this is purely hypothetical for discussion purposes only.
Absolutely. Do your own research thoroughly.
Okay, that wraps up our deep dive into Hexcel Corporation's first quarter 2025 earnings call. We've hit the key numbers, the drivers behind that revised outlook, the cost controls, the tariff angle, and even a speculative trade idea.
A lot to digest there, reflecting the complex environment Hexcel is navigating.
Indeed. What are your thoughts? How do you see Hexcel managing these challenges? Or the tariff impact playing out? We always encourage you to continue the conversation and do your own thinking.
Thanks for tuning in to TalkTickers.
We'll be back soon with another earnings call breakdown. Remember, this is all for informational purposes. It's definitely not financial advice. Always do your own due diligence before making any investment decisions.